While the paper price of gold in US dollars continues to be in a trading range, central banks and private sector demand in Eastern Europe, Germany, China, India, and the rest of Asia continues to increase. So as you can see there on your screen, we've had enormous amounts of central bank buying on the dips. Poland has actually announced that they plan to buy even more physical gold. Russia is not holding any U.S. treasuries in their trade surplus and their reserves. They are buying physical gold every month, not just from gold mines inside of Russia, but also importing physical gold as well. And the Perth Mint just set a new sales record. But we are seeing increased amounts of net central bank purchases. India has been accumulating physical tonnage as well. I'll probably do a separate video on this, but there was a recent article out in the last couple weeks by Ronan Manley from Bullion Star alleging that the Indian government is going to buy a lot more physical gold because the majority of their physical gold holdings are not really there, because they're held by the Bank of International Settlements and the Bank of England, and they've probably been sold out or loaned out, leases and swaps, and they don't allow independent audits. So I'll cover that in a separate video. But I've been covering gold stories now for a very long time, and the physical gold demand with analyst projections that we've seen coming out of China are enormous. Chinese gold jewelry demand, Chinese investment demand is really starting to pick up. It started in January of 2021, and it's really accelerated the last 3 or 4 months. A lot of it has to do with draconian policies coming out of China. Base metal prices are also rising. Now, a lot of gold and silver miners, the share prices have not really rallied yet, except for Kirkland Lake Gold. It's one of the few ones that's done very, very well. But we've seen silver miners like First Majestic Silver and I think Endeavor Silver start to hold back the amount of silver that they're actually selling. So they're keeping it in inventory. They're hoping that there will be a higher silver price. Maybe they're trying to help a little bit. Although if a lot of American silver miners started to do that, the U.S. government would say that that cartel, unlike the sugar cartel that's allowed, unlike the Federal Reserve banking cartel that's allowed, would not be allowed. You're not allowed to have a cartel in the United States unless you have the U.S. federal government's permission. Which is why when people say that the Fed is fully private, it's a public-private partnership actually with government in bed with it. The Fed actually walks both lines. There's top secret security clearance levels for many Federal Reserve employees. So all the people at the Fed are not privy to all the information, and Federal Reserve emails also have a .gov email address, and they have their own police force too, which is even scary. So those of you that are planning on protesting outside a Federal Reserve Bank, I strongly recommend not doing that. So the bottom line is that central banks are buying enormous amounts of tonnage of physical gold. This is not showing up in an increase in the paper price yet in US dollars. Although if the buying continues at this pace, especially the increases in Chinese gold jewelry demand, increases in Chinese investment demand, increases in investment demand for gold out of Germany, Eastern Europe, and India, that will eventually affect the price. And the gold miners with rising energy input costs and the gold price being stuck in a trading range correcting now since September of 2020, I would argue that a lot of that was paper price manipulation, as the Fed's balance sheet has grown enormously since March of 2021. Over $1 trillion, the Fed's balance sheet has grown, and the paper gold price was held in check, while all the other commodities prices, especially base metals and energy and food, are going bonkers. Gold and silver are the only commodities in US dollars that are not responding to all these governments and central banks doing quantitative easing, monetizing debt, increasing their balance sheet, and trillions upon trillions of misallocated capital globally. Finally, if you like content like this and want to help keep content like this free so it doesn't all end up behind a paywall, or you want far more in-depth content research, financial education, and analysis than I provide in these short little free videos, there are now over 180 articles, charts, and audio podcasts behind the paywall on a lot of interesting topics about global macro, companies, and sectors, all for the cost of a Starbucks cup of coffee per month, only $5 a month. I think it is one of the best deals out there. And I cover a lot of interesting topics about gold mining, silver mining, precious metal royalty and streaming companies. I analyze mergers and acquisitions, which gold companies are actually increasing their dividends. A lot of the gold miners are not going to respond very well if oil and energy prices keep rising. Some of the more profitable gold miners did hedge some of their energy input costs, But if this trend continues with higher energy input costs and gold and silver prices in US dollars do not start to rise to offset that, margins are going to get squeezed for many gold and silver miners over the next 6 to 12 months. That is not a problem for precious metal royalty and streaming companies. Their costs are fixed. So if energy costs rise, if miner unions in other countries demand higher wages, if governments in other countries demand an extra royalty tax on mining companies, precious metal royalty and streaming companies are not affected. So these higher input costs of energy and labor do not affect the royalty and streaming companies like they do regular gold and silver miners. But they will affect gold and silver miners wanting to bring on new gold mines. And just in the last 17 or so weeks, there are 30 new articles out on a lot of interesting topics. I have not been feeling well the last couple weeks after my birthday. I owe my patrons an update on uranium. Also, probably I'll put out an update trying to explain how the costs are calculated for rising energy input costs, but it really depends on the individual miner and if they actually hedged some of their energy input costs. Also, if the miner operates a lot of open pit mines, because the open pit mines use more diesel. So if I could wrap up this short little video very quickly, there are a lot of news stories showing that demand for physical gold, whether it is central bank purchases or private investment demand or gold jewelry demand out of China, go and watch those videos I've done about Chinese gold jewelry demand and Chinese investment demand in the last month if you have not already done so. One analyst is actually projecting a 43% increase in Chinese gold jewelry demand and a 33% increase in Chinese investment demand. This will eventually affect the gold price, especially if a lot of these gold miners are not going to be bringing new gold mining supply online. There are going to be more mergers and acquisitions in the gold space, but because this is a buyer's market, the premiums on a lot of these mergers and acquisitions, especially the Kirkland Lake Gold and Agnico Eagle merger, which I did not like. I don't think it really benefited Kirkland Lake Gold shareholders at all in the long run, especially for the valuations paid on those two high-quality mines. But the industry does need to consolidate, and the industry actually has a lot of cash on hand, good cash flows, profit margins, unlike many of the other industries. For example, the oil industry, there is over $1 trillion in underinvestment in the oil industry to find new oil reserves. The amount was enormous back in 2015, 2016, and that was when the shale boom was still rapidly increasing with oil production. So there was still a massive underinvestment from foreign oil companies and national oil companies. The gold industry needs much, much higher gold prices to bring on new mine supply. So we'll see what happens in the not too distant future with that. But the bottom line is that the paper price is being manipulated and that central banks are taking advantage of it by buying the dip, buying enormous tonnage orders of physical gold. So is private sector demand for investments and for jewelry in China and India. And also in other countries like Germany, which are seeing record amounts of stagflation that they have not seen in decades.